We got to resolve something. Why the heck does everybody suddenly hate Salesforce?
Sell.
Last Wednesday night, Salesforce reported, and as usual, we spoke to CEO Mark Benioff on Mad Money after the print. Now, I thought it was a pretty good-looking quarter. Solid top and bottom line beat with real momentum for the company's Agentforce AI offering. And was I wrong? But even better, I thought management gave you an impressive outlook for the current quarter, raised the full-year forecast. Again. And yet, after soaring as much as 18 points in after-hours trading for people like me who thought it should go up, it gave up all those gains and then dropped another 10 points the next day. Now, this was just a shocking development for this once-beloved enterprise software story. Now, it kept going down on Friday and yesterday. We're finally stabilizing today, thank heavens. Overall, Salesforce has fallen nearly more than 4% since the quarter. And given that I'm so close to the story, it's been a core holding for my Chapel Trust for ages, for heaven's sake. I wanted to circle back because you need to know why the sellers have been dumping the stock, why I think they're wrong, and why I've been wrong. Let's start with the bear case. Even before the quarter, this stock was getting mauled because last Monday, Salesforce announced an $8 billion acquisition of a company called Informatica. That's a data management and analytics play that no one really cared about, frankly. During our interview last week, Benioff explained that Informatica's technology helps enterprise customers better organize and standardize their data, making it more useful for all sorts of AI applications, including Agentforce. But investors have their doubts, and that's primarily because of Salesforce's last big deal. That was the nearly $28 billion cash and stock acquisition of a company called Slack, which closed in the late summer of 2021. It's a particularly frothy time for the stock market. I think it's safe to say that Salesforce overpaid for that one. Now, look, they're integrating Slack's collaboration tools into their whole product suite. I'm going to hear that immediately for saying what I just did. It's just not clear how much of a boost it's given them, at least not to here, not to Wall Street. Now, roughly a year after the Slack deal closed, we saw several different activist firms make a run at Salesforce, which eventually led to much more cost discipline and sizable buybacks. Wall Street loved all that. It's a big reason why the stock rallied from 132 and change at the end of 2022 to an all-time high of $369 last December. Boy, is that far away from here. But I get the sense this Informatica acquisition is giving investors, how about PTSD? They're worried that Salesforce will lose its spending discipline and return to their more freewheeling days of old, which brings me to the real crux of this issue. There's a feeling that old Salesforce, meaning the core sales and customer relation management software, plus all the accoutrements, is slowing meaningfully. And the new AI offerings like Agentforce, they just aren't ramping quickly enough to make up the difference. I thought that Salesforce much better than expected results and guidance last week would help dispel that notion, but apparently not. So let's take this apart. It's true that growth for most parts of Salesforce is indeed slowing. If you look at the constant currency growth rates, that's important, for constant currency, for all 5 of the company's segments, 4 of the 5 saw the growth decelerate in the latest quarter, both year over year and quarter over quarter. Only the AI-related segments saw an acceleration from 10% a year ago to 14% in the latest quarter. And by the way, if you thought the strong guidance would quell some of the concern about a slowdown at old Salesforce, you'd be wrong, because much of the strong guidance was dismissed as simply the result of a weaker dollar, which boosts the company's sales overseas. Now, while the guidance for the current quarter and full year was basically ahead of expectations on every line, some analysts fixated on one line in particular, and that's the current RPO, or remaining performance obligation. That's expected to grow by 9% in the current quarter on a constant currency basis. And one analyst pointed out this would be the first time in history that Salesforce's current remaining performance obligation growth fell to the single digits. All right, now how about this Agentforce debate? Let's take it head on. Like I said earlier, the concern here is that Salesforce Agentic's platform simply isn't ramping fast enough, despite management's insistence that Agentforce is selling well. The company boasted about some notable customer wins. They talked about PepsiCo, OpenTable. Hey, Falabella, that's the largest department store chain in South America, in case you didn't know. But while Agentforce definitely has some momentum, it's growing off a very low base, which means it's not yet big enough to truly move the needle. And that's what worries people. Let me put it this way. Last week, the company noted that Agentforce had reached $100 million in annual recurring revenue after just 2 quarters. That's the fastest growing product in Salesforce's history. That's great. But Salesforce is on track to bring in more than $41 billion in sales this year. So $100 million in Agentforce sales, well, that seems like kind of a rounding error to me. All right, so how come I'm sticking with this one? Maybe I'm a loser. It's been said. Look, I can't dispute that the growth of the core business is slowing here. But But that's, I think, simply the law of large numbers. You could say the same thing with virtually any mature business. I saw it happen to Oracle. Although, of course, the price to earnings multiple is low. I don't care that old Salesforce is seeing slower growth because it's also seeing a significant increase in profitability. People are treating this like it's an ailing revenue growth story. And that's why they bought Informatica to kind of hide it. But it's increasingly become an earnings growth play, and the earnings growth is excellent. And Informatica doesn't worry me. As for the other legs of the controversy, again, the Informatica deal and the Agentforce ramp up, I got to give you what might be a really unsatisfying answer. This is now a show me story. I hear Benioff's arguments for why Informatica is good for Salesforce, but I understand why the market's unconvinced. He'll have to prove over time that the deal makes sense. I don't think Mark wants to sit there and buy back a lot of stock like Apple has done. He's itching to buy more businesses if they're additive, if they make the company faster growing, if they augment Agentforce. I see nothing wrong with that, but I don't mind big buybacks either. Now, how about this Agentforce? Again, Salesforce will just have to prove that the product's a winner over time. What do we really want to see? Well, I'll tell you what we really want to see. We want to see more bold-faced customer wins, but more importantly, we need to see companies that use Agentforce engaging in large-scale, yes, layoffs. Now, no one in this business will ever admit this, but corporations are excited about all this AI stuff because it allows them to fire people. Salesforce basically needs to prove that Agentforce can replace lots and lots of expensive white-collar workers and all that healthcare costs and everything else with something that doesn't cost a lot at all. Or else it's just what happens is AI is just something additive, but not revolutionary in what it does to the enterprise. In the end, look, I'm going to stick with Salesforce because they got an incredible track record. Every time there's been something uncertainty about the company's outlook, the right call was to trust Mark Benioff and his team. Plus, at this point, the stock's gotten surprisingly cheap. The numbers keep rising, yet the stock's has struggled. I mean, the darn thing's over 23 times earnings. That's the cheapest Salesforce has been in ages. Over the past 5 years, it's traded about 41 times earnings on average. Right now, I think you're getting a steal. But here's the bottom line. Salesforce is hated here because Wall Street doesn't believe in the Informatica deal or in the core business. They think it's slowing. And the idea that Agentforce can somehow grow fast enough to make up for that difference, This is a moment where you need to have some faith in management. I have faith. But you need to decide for yourself if you're willing to trust Mark Benioff and his team, because ultimately that's all this comes down to. And for many, I know that's just not enough. Mad Money's back after the break.
Coming up, Dell had a strong quarter, so why did investors not compute? Cramer's taking a closer look at the PC players' results. Next. Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.